All right, ladies and gentlemen, hello, and good morning. This is me, Darius Anucauskas from Markets.com. Stalled there a little bit. Yes, welcome. My name is Darius Anucauskas from Markets.com, and I'm the chief market analyst here. And look, today's Wednesday, ladies and gentlemen. Today's Wednesday. Today's the Fed day. We also have the BOC day as well. So look, we're gonna look into all that. But first of all, as always, as we always normally do this show, we need to quickly read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Basically, I'm going to put my usual good morning in the chat room, but let me just do that very quickly. Good morning, everyone. Good morning, everyone. There we go. Look, a little bit of a few difficulties that I'm having right now with my streaming software here. Hopefully you can hear me and see me well, because again, lately, technology has not been my friend, but look, okay, you have those moments. Eventually we'll get through, we'll plow through everything, right? Look, today's, like I said, today's the 30th of July. Today is Wednesday. Today we have the Federal Reserve interest rate decision. Look, we'll jump into all that. Also, just I wanted to quickly mention the Markets.com website. Oh, why is it skewed here a little bit? Let me just adjust my screen very quickly. There we go. Like I said, technology this morning is not my friend. In general, this week, I think it's not my friend, and yeah, it's just all over the place. Look, like I said, the website, check us out, ladies and gentlemen. We have some good info here. You want more information about us, you can always check out, like I said, our website. Also, before I jump into the markets, this thing here, Tomorrow, I'm holding the webinar, the Zoom webinar. It's registration only, and feel free to. And if you want to join in, look, honestly, feel free to do so. We're going to talk markets, but in a form of when the markets go down. Basically, what we could look at, where we could invest. So yeah, this is in terms of like which sectors perform better. Now. Again, if you're not into investing, still, I think it's a good kind of information to know for you, just to kind of to be aware in case your circumstances change and you decide to move into investing instead of trading. Look, so join tomorrow. Yes, you can find the link in the description of this video. Feel free. It's absolutely free. Just tune in. Check us out. Look. Nikkei 225. Okay, let's have a look at what's happening. In general, I think that since Monday, we had a bit of a shift here. So look, on Monday, I talked about Nikkei here, and I talked about this little possible bullish flag formation. But what I also said, look, even if it's going to drift a little bit more to the downside, as long as it stays somewhere above this 40,000 kind of 620 zone, I'm going to continue targeting the upside, because I will consider this little move here as a little temporary correction before another possible leg of buying. That's only because, like I said, this barrier, I used to see this as a good area of resistance. We broke it. We pierced through it. That's fine. Now we're testing it from above, so let's see if we can rebound from it. In general, not everything is kind of that bad in Japan. We do have the US and Japan did reach a deal. What can I say? Last week it was the deal that reached. I mean, Japan agreed on 550 billion investment of US dollar investment into the US, or basically purchasing goods for that amount. Yeah, at that moment it was seen as the top deal, but Monday or during the weekend, the EU and the US kind of surpassed that. But anyway, I'll get to that point in a bit. Look, Long story short, for now, looking at this technical picture, yes, like I said, I'm leaning a little bit more towards the upside. For me to consider a move to the downside, I need to see a break of this upside line here, taken from the lowest, the low of the 23rd of May. And then, yes, I will get a little bit more comfortable with lower areas. At this point, I'm just observing the price action. In terms of economic data, very quickly, so we don't really have much. Let me just double check. Where's my Japan here? I think Japan is not even in the list here. Let me just put it back here into the picture. So Japan, we didn't really have much data, just apart from a few Japanese government bond auctions happening. This morning, Australia took the kind of the spotlight. Tomorrow, we're gonna get the BOJ interest rate decision. Now that's where the action could come. But we're watching the Federal Reserve. Now look, with the Bank of Japan, because I'm not gonna do a session. I'm gonna do actually a separate session on the Bank of Japan. I'll throw out a video later on like I said, on the BOJ interest rate decision. But what I wanted to say is that look, we're not expecting anything. I think that the moment we are expecting just the same rate. Yep, and I think it's going to come out the same rate unless there's going to be a super surprise here or something like that. But at the moment we are expecting just the same plus 0.5. We do understand that the BOJ did want to do the hike because they want to strengthen the Japanese yen. But there's a very thin line there. I mean, you can play the game very carefully here, because if the stock market starts shifting more and more to the downside, the Japanese yen could just strengthen on its own. Of course, not against the US dollar, because the US dollar is also now taking the spotlight of a safe haven, taking the role of the safe haven. But still, it could be on a stronger side against some other major counterparts. So yeah, keep your eyes on the BOJ interest rate decision tomorrow. Consumer confidence is also coming out, so we're expecting a higher number than the previous. So let's see if that's going to be the case. Housing starts also coming out, and there is a slight improvement, still negative zone, but an improvement that we are expecting. So coming back to Nikkei, like I said, we're at a critical spot. I think that the move here will be rebound or will be determined by the Fed activity, or maybe it will break or pop or drop or something like that. But then eventually it will stabilize and wait until the BOJ comes out, and it's not going to be long, because again, if we look at the economic calendar, first late in the evening we'll get the Fed interest rate decision. First, of course, we'll get the BOC interest rate decision, then the Fed, and then after like a few hours, let's put it this way, we'll get the BOJ. So it's not, the market won't have to wait long. Let's jump into China very quickly. China still holding on. Look, I mean, I have nothing to add here. Still, from the technical perspective, we are trading nicely above this upside line, above some of the key breakout points here that I talked about previously. But we're struggling to overcome that 14,200. I need a clearance of that 14,200 in order to go to the upside. US 30 index, which is Dow Jones Industrial Average, after a beautiful test, a beautiful hit of a new all-time high, we are drifting back down. We drifted back down. We're testing this upside line here, taken from the lowest point of April, and that means that that means that we are kind of in a bit of a pickle here. For the the bulls should be a little bit in the pickle. Maybe this is where the the retracement back down could happen, and we are at a critical spot. I think that the market will be bouncing around here somewhere, waiting for the Federal Reserve interest rate decision. We know that the current expectation is that that we're not going to have a cut. We're just gonna have the same rate again, and we're waiting for September in order to kind of have the cut. Of course, the White House is not going to be very happy about this, because they keep on advocating that the Fed needs to cut and stuff like that. But okay, look, it's a tricky moment, and it's not everything that the White House wants can get. So, and another thing is like if we do see kind of, you know, the Fed being submissive and like, you know, going for what the White House wants, then I think that the market will lose trust in the Fed, because again, at the moment, I think it's like the last little resort of what's the name, like, you know, a safe haven is the Fed for the market now. You know, because again, we know that tariffs, yes, tariff deals are being done, but are they very favorable for both parties? No, it's just for one party, and we know which one. So, you know, the market is not loving that idea, because we're seeing Europe kind of failing a little bit. You know, we do understand why. So, ladies and gentlemen, for now, looking at the Dow, don't forget that we're also in the earnings season right now. So basically, if you're, you know, we could see shifts here and there. We have big companies coming out with with numbers. Let me actually double check what do we have. Calendar earnings. Let's do this separately here. The earnings calendar, and on this one we have to put the U.S. only. This is the a little bit uncomfortable on trading view, that if I want to use the economic calendar with all countries, but on the on earnings here I have to, you know, kind of limit it, and it's the same thing, as the same country, it's the same kind of calendar here. But anyway, minor issue. But look, what I'm talking about here. So today, Microsoft, Meta, Qualcomm, yep, these guys are ADP are, you know, are delivering Robinhood. There's going to be on the spot. So a lot of big companies tomorrow as well. We have Apple and Amazon, Mastercard, AbbVie, you name it. So yeah, big companies delivering their earnings, and that's why yes, the Fed is going to be important, but we might get these little extra shifts or extra moves, volatility moves, and based on the earnings, and you know, of these major big companies like Microsoft, Apple, you know, Meta. So yeah, keep your eyes on that, ladies and gentlemen. We are in somewhat of a difficult period right now. I would say, actually, you know what? When we were not. So that's why for now, look, let's go with the flow. Let's see what's going to happen. If we do pop back above the 45,077 territory, I'm going to go to the upside. For the downside, a drop below this upside line here could do the trick for a few more sellers. The S&P 500, similar story. After a beautiful hit of the all-time high, we came very close to my 61.8. I would say somewhat of a success. You know, I keep on saying it's never the exact level. It's always the area near that level. So we can actually take this as the area near that level. Yeah, we drifted lower. We corrected a little bit lower. Are we in a let's say, you know, still bullish mode here? Yeah, in a way, yes. I mean, but either way, I mean, I still need to see a clearance of the current all-time high, and then kind of I could go for some more upside. For now, I'm just observing the price action here. I'm cautiously bearish, but only maybe for a bit of a larger correction back down, maybe towards this 6,284, 85 zone right there, because again, that was my barrier for the upside. Now it could take the role of support. Nasdaq is also at an interesting spot here. We remain above the 23,261 zone, and yeah, if we continue to stay above this area, I will continue targeting the upside. If we start falling below it, wonderful. A few more sellers here could join in. Ladies and gentlemen, let's in terms of economic data, ladies and gentlemen. So yes, the Fed, that's for sure. That's already like a given. We're all watching it. It's very important. But probably the more important thing will be the press conference. Now that's where I think that the activity could happen, and this is where the markets could, you know, feel either the love or the pain. So yeah, let's wait until we get that decision. In terms of other economic data from US, tomorrow, initial and continuous jobless claims, PC price index coming out. So that's something of an important area here to consider. That's Thursday. But by the way, Wednesday as well. Totally forgot. ADP. Where's that ADP? Where is that? There we go. Because all these earnings and the Fed is kind of overshadowing the fact that we are in the job numbers week as well. And ADP is coming out. It's expected to come out at higher area. I mean, look, it's of course it's something to keep in mind, certainly, because we have been on a bit of a decline. It was last time it dropped below into negative territory. Last time it was in July of 2020. It was below zero. So yeah, it's going to be I think it's going to be a very important ADP number to see what's going to happen here. Are we going to actually drop again below into negative territory? If so, I think the market could kind of hit some alarm bells. Thursday initial and continuous jobless claims, something to keep in mind. Also, let me just double check. Core PC, yes, PC and core PCE numbers are coming out as well. Honestly, big week. Friday, of course, non-farm payrolls and job numbers, the main job numbers. So average hourly earnings, we're expecting to see slight upticks here. Non-farm payrolls expected to come out on the lower side than the previous 147. Of course, what I'm going to be interested in is how much this will be revised. If this is going to stay at 147K or actually is going to be revised to the lower side. So look, in general, I will do a separate piece on job numbers on YouTube today. So keep your eyes on that. So later on, I will throw out one of those. But in general, to kind of briefly mention is that, look, non-farm payrolls coming out on the lower side. In general, we have been drifting significantly to the downside. So we're establishing new norms. New norm here, let's say, look at this. I'm ignoring this COVID period shock here, but what I'm interested here is that since kind of 2021, when we were closer to 1 million, we continue to drift lower. Look at this. I mean, it's just grinding closer to that zero mark. Now this is where my issue is. I mean, this is where why we're, let's say, not at the levels. If the stock market is doing so great, why are we not at levels here? Is everybody in full employment or something? So by the way, in terms of unemployment rate, let me just open the chart here for the US. So launch the chart. Yep. So if we're comparing this here, so unemployment is kind of ticking up slowly since bottoming here at around September 2022. If we're taking a look at September 2022, we continue to grind. So look, it's unemployment has been falling, right? Slowly. Okay, I get it. We are creating more jobs maybe here, so this is, let's say this is the COVID period. So if we're taking looking at June, mid 2021, when we had higher unemployment, higher, around closer to 6%, and we started declining here from the mid 2021. Looking at NFP from mid 2021, we have been on higher levels. Yes, we were creating jobs. So basically, unemployment was dropping, and basically, it seems like more people are getting employed, less jobs are required. And given the fact that right now unemployment still remains at relatively low levels, not of course as low as in 2023, but still relatively low levels. And but the thing is, the problem, it has ticked up. So if we suddenly see a jump above 4.3, something like that here, 4.3%, I think that this is where the market will get a little bit kind of worried in a way, because again, because my problem with it is NFPs are not getting created, like more jobs are not getting created. It's just on the contrary, it's just getting lower, lower, lower. So, can I say? It's a difficult one here. I mean, I would say, but the stock market is rallying. You know, the stock market is at near its all-time highs. So maybe, yeah, I don't want to say, like, I don't want to use the B word, bubble, but certainly a few concerns are here and there. And of course, I don't want to be that pessimist who's going to be saying, you know, for like 10 years, I'm going to be saying that, oh, the market crash is coming, it's coming, it's coming. And, you know, like for 10 years, it's just rallying. Yeah, then, you know, but then eventually after like 50 years, you know, the crash happens and you're like, huh, you see, I told you so. Well, yeah, it's not one of those people. No. Still, the stock market shows resilience, but my problem is that the jobs are not really getting created that much. Anyway, looking at the dollar index here, US dollar, beautiful rebound. I talked about this in the beginning of this week, last week as well. I said to you, look, maybe we have ourselves a little inverted head and shoulders pattern with the neckline being right here. Near the 98.65, and if we can get a nice clearance of this territory, then yes, wonderful, more buyers could join in. So long story short, for now it's an interesting moment here, and it seems positive for the US dollar. Let's see if that's going to be the case. In general, it's coming at a point where, you know, you have established the main deal with the EU, and your dollar suddenly starts picking up. I mean, when the EU is committed to purchase a lot of goods and services from the US, basically it's becoming a little bit more cheaper. So basically, you're trying to put down Europe. Very, very straightforward, you know. But I don't know. It's a shame to see what's happening. But unfortunately, we are the observers. Nobody's asking our opinion. We are the observers in this all. Look, we'll see how it goes. But for now, looking at the technical picture here, for me to consider a move lower on this one, well, basically, I would need to see a break of this upside line right here. This upside line, yes, it would be the one that I will be watching, and certainly, yes, keep your eyes on this. If we get a nice break of it, and we also break below the 97 territory, I'm going to go lower. For now, I'm watching this 98.65. Let's see if we can break again this area. The German index DAX, let's have a look at this one. The German index, yep. What can I say? We're on a bit of a roller coaster ride. Look, we tested this beautiful area near the 23,922. I'm looking at the cash index, by the way, on our index, on the cash index of DAX. And by the way, the main index here is also, we're also trading, so we can adjust this very quickly here. So we can put this little range here. So on the cash index, I'm keeping an eye on this 23,922 territory. A nice good break below it could open the door to some lower levels, because at the same time we could break below the 50-day EMA. For the upside, I would prefer actually to wait for a push at least above the 24,562, and then we could take it from there. Long story short, more buyers could join in here if we clear this barrier, and then we'll take it from there. Yeah, so let's see what's going to happen, and let's see which direction we're going to take here. But at this point, I think the best option here for DAX, for us who are trading DAX, is to kind of maybe pause here and just, if you're looking for a breakout or something, then yeah, just at this point, just kind of take a pause a little bit, just observe the price action. Jumping into a UK index here, let me just double check here. Yes, UK cash index here, there we go. Look, we're also, after we created a new all-time high on Monday, we drifted back down. We're now kind of moving sideways a little bit, pushing here and there. So yeah, it's a tricky one. It's really a tricky one, and again, the same story like as with DAX. We need to see a clearance here, and I think at this point I will do this instead. So if we do clear the current all-time high near the 9,175 territory, I'll go to the upside. For the downside, I would prefer to wait for a drop below the 9,041 in order to consider lower areas. Let's jump into the Forex world very quickly, ladies and gentlemen. There we go. AUD USD once again clearing the lower side of this rising wedge pattern. Look, I mean, it's not the most picture perfect rising wedge, but because we got a violation here, we had a violation here, but overall it still respected it. So look, according to all the tier rules, rising wedges tend to break to the downside. However, we always wait for a confirmation, break. We got the break, but we are failing still to stay below it. So that's where, that's where it comes to me here, where if we do stay below the 50-day EMA, because this is where we're currently holding at. If we do stay below the 50-day EMA, then yes, I will go towards the 200 and the 100-day EMAs. But if we stay above it, there is a chance for this one to push back up. Look, in general, the US dollar, because the US dollar, we're waiting to see what's going to happen with the US dollar. Is it going to pop, or is it going to reverse back down? Because if it's going to reverse back down, then we could see AUD USD pushing nicely to the upside, and we could see maybe again another test of the upper side of the rising wedge pattern. But in general, look at how well the upper side played out. I mean, it continued to provide resistance, and can I say, for now we're testing. It acted as a good area of resistance. Yes, it drifted back down. So now we're flirting with that 50-day EMA. Let's see what's going to happen with that. But at the moment, if we do stay somehow below the 50-day EMA, I'm leaning towards the downside. AUDJPY, our risk on, risk off monitor, and it's breaking the upside line here. It's the first step towards some bearishness. However, we could stall somewhere near the 95.74, 75 zone right here, and maybe we could rebound. This way we could confirm a little range for ourselves. Let me just show you what I'm talking about. So this is what I'm talking about here. So we could then confirm a little range. Let me just highlight it a little bit. And then we'll see if we can clear one of the sides of it. Then great, wonderful. I will consider the next short-term directional move, because a nice pop of 97.32 could open the door to that 99.16 or even higher, but drop below the 95.74 territory here. It could open the door to some lower levels, but we need to first to see the test of the 200, the 50 and the 100-day EMAs, and then we'll go from there. NZD-USD. NZD-USD is at an interesting spot here, and we dropped below the 50-day EMA, so look, it's pushing a little bit lower. Oh, by the way, with Australian numbers, look, I totally forgot to mention that this morning we got the inflation numbers. Look at this, and we had inflation eased a little bit here. On the monthly CPI indicator dropped to 1.1. It was expected to come out at 2.1, and the year-on-year headline inflation came out at 2.1, where the previous one was at 2.4. So it was expected to go lower, but it came out even lower than that. So this is where we're seeing the weakness from, basically. So in Australian dollar, and okay, this is all explainable. NZD-USD is holding on a little bit better. That means that AUD-NZD is pushing a little lower. NZD-USD is holding a little bit better here. We're still above this upside line, so we're above all the EMAs on my daily chart. So in a way, everything is still okay. But look, if we start, for now, I would say this way: I'm leaning towards the downside, and I'm leaning towards that 200-day EMA, and then we'll take it from there. So this is what I'm going to keep an eye on. I will see how this is going to play out. If we clear the 200-day EMA and this upside line, then yes, I will consider lower levels. NZD-JPY. NZD-JPY is the barrier here. That was the word. It retraced from that barrier. it from this 88 point kind of 89-90 zone. It was a good area of resistance. Now we're seeing it held, and we are seeing a nice retracement. Look, I know that we could see some more downside, but you know what? At this point, I'm trying to be a little bit more on the careful side, on the cautious side, and trying to find some sort of logic here. I think that the best option right now at this point is just to wait for a drop below the 87.47 zone, which is not far from the EMAs, the 200, the 50. So yeah, if we can drop below that, then yep, more sellers here could join in. USDJPY is at a very interesting spot here as well. We remain above all the EMAs on the daily chart, and this is what I was talking about. So the stock market yesterday declined, and Japanese yen picked up interest despite the US dollar being also on the stronger side. Still, I think the market participants preferred the option of jumping into the yen, and this is what the I think the BOJ understands, that that's why maybe they don't need to go for that hike. In case Japanese yen starts devaluating strongly against the US dollar, then we could see the move, the move by the BOJ when it can start, start tightening again. But look, for now we're not there. I think that the market is, or Japan is trying to just kind of leave it to the market to sort it out, the strength of the Japanese yen. Let's see if the plan succeeds. USDCAD, beautiful rebound from this territory, beautiful move, beautiful push above the 50-day EMA. Now we're just kind of near this key area of resistance around the 1.3797 zone, and if we do stay above that 50-day EMA here, shown as the green line, yep, my next target is the 100-day EMA and maybe even the 200-day EMA, period. USDCHF, similar story, basically like copy of the DXY, and is just repeating whatever DXY is doing. So yes, beautiful rebound here, push. So hey, we're watching this very carefully. Let's see what's going to happen here, we'll go from there. But long story short, for now, I'm watching this 50-day EMA. It's providing good resistance. Look, I'm watching also this downside line. I think it's an important one to watch. This one's taken from the highest point of February of 2025. And if we stay below it, then we could see another decline. So long story short, it's an interesting spot here, and 0.7871 is the one that I am watching here for the downside, but I think I will start looking at some lower levels if we do clear this territory right there. Let's jump into EURUSD. Of course, something that we're watching very, very carefully. Look at this decline that happened on Monday, and of course this is attributed to the deal, because everybody understands it was a deal that was made by the EU is to please the US, because the EU still needs to or wants to have US backup all the time. So that means that they need to the EU needs to bow down a lot. So, and the deal is followed by a lot of criticism by some European countries, or should I say many, because again we understand that this is not the most favorable deal for the EU, where you're gonna have there's zero tariff on U.S. goods coming into the EU, but there's 15% tariff on the EU goods coming into the US. Look, it's not that the European Union is only, or European companies that are only benefiting from this. No, it's the US companies are also benefiting from the cheaper olive oil. Look, long story short, for now, of course, I'm mentioning only the tariffs. I'm not talking about even the big spending bill that the EU will have to pick up. The 600 billion on U.S. goods and 750 billion for energy. I mean, of course, that's not all in one go, no, but it's over a period. Like for energy, for example, they are committed to 250 billion every year until Trump's presidency kind of ends. That's an interesting moment. So and then probably everything will go back to normal, right? When he leaves office. What is normal? That's the main important question. Look, long story short, for now, EURUSD, not feeling the love. Certainly, if we continue to trade below the 50-day EMA, I'm leaning further south towards the 1.14 zone or even below that. EUROJPY. Now this one's an interesting one. I talked about this a lot already, and finally we're getting a little bit of retracement, and we're getting a little bit of retracement here. Boom, 23.6, perfect hit, ladies and gentlemen. Look at this. Now we're watching this 23.6. We're watching this 170.80 zone. If that gets cleared, yes, my next target is going to be the 170 zone, the psychological 170 zone, or even better, the 169, which currently coincides with the 50-day EMA shown here as the green line, but later on probably won't, but it will be close enough. So yeah, good potential target here, the 38.2. GBPUSD holding nicely above this, above the 100-day EMA, so it's doing a little bit better than the euro. So that means EUROGBP found resistance. There we go. Look at this. I talked about this. I don't like this pair. I really don't. And it has a mind of its own, but I still continue to watch it because it's always interesting what it does, right? But I strongly kind of suggest if you manage to master EUROGBP, congratulations. But if you didn't, don't waste too much of your time on it, because it's a pair that has a mind of its own. But again, somebody likes to trade it. Me personally, I don't. Anyway, coming back to the GBPUSD. So yes, still bearishness is on the horizon, especially if we do fall below the 100-day EMA here shown as the blue line. If we get that move below it, wonderful. 200-day EMA is going to be my next good target. Let's jump into the commodity world. Gold is trying hard to come back here. Look. I talked about the ascending triangles a lot already. Probably, if you were watching my webinars, you probably kind of understand that this is what I was talking about previously and many times already. So we violated the lower side of it this week, but now we're kind of hugging the 50-day EMA here shown as the green line, and we're trying to get back inside the triangle. Look, on a weekly, you'll see a nice false breakout. So this is what I'm thinking right now, is that maybe, just maybe, we could see, a reversal if the stock market continues to drift lower. We could see gold actually popping back up here, and on the weekly, we'll get a nice little false breakout here, and this is where we'll go, further. Maybe this is where gold could, climb back up. But I think I'll get a little bit more excited with the upside if we do push above the 3,345 zone right there. And then, yeah, we'll go from there. Silver very quickly. We're near key support zone, this upside line. Look, I'm not going to rush into things. In a way, this could be also considered as a breakout point here, because look, we're forming something of a bearish flag. If we do drop below this little territory here, this 37.89 zone, I think yeah, more sellers here could join in, so keep that in mind. Look, long story short, for now, if we do break this upside line and we fall below the 37.89 zone, like I said, I will consider a move to the downside. Palladium, very quickly on Palladium. This 1,250 zone provided fantastic support. That's great. But let's see if it has enough steam to travel back up. If it doesn't, and if it falls back below the 1,250, I will consider a move lower. Platinum, similar story, holding nicely above this 1,400. A nice clearance of it is needed in order to go lower. that's what I'm gonna do right now. Yep, copper is okay, stalling near the subside line. Yes, we had a bit of a roller coaster ride here, but in general, it's still holding on. So look, what I'm curious about is that if this is not gonna end up being something of a, somewhat of an ascending triangle pattern, maybe something like maybe. Again, at the moment, maybe it could be an ascending ascending triangle pattern. Maybe later on it could be a rising wedge here. Like, there are many options. So let's not overcomplicate our lives. For now, let's keep an eye on that 5.89 zone still. If we can clear it, we can jump above it, then yes, more buyers could join in. For now, I'm just observing the price action here. Of course, oil. Look at this beautiful jump. Look at this craziness, ladies and gentlemen. Oh my God, this is like just back above the. Look, I was telling you that I'm bearish on this one, and I will be bearish as long as we stay. As long I'll be bearish as long as we stay below all my EMAs here on the daily chart. No, cancel. But I'll get more bearish if we do fall below the $65 mark. This exploded to the upside, pushed above all the EMAs on my daily chart, and now we're testing the 69.62 territory. Look, if we clear it, I will go to the upside, ladies and gentlemen. Yes, this is way too big of a move to ignore. All despite me being bearish still, I cannot say that, look, I'm ignoring this. No, this is maybe changing the game a little bit. Let's see what's going to happen here, of course. But long story short, keep your eyes on this 69.62 barrier. Currently, we're slowly climbing above it. Let's see if we can stay above it. Natural gas. Natural gas is forming something of a bearish flag. I don't know. Let's see if this is going to be the case. We have a pole. We have our flag. Let's see if we can break lower. Either way, I need to drop below that psychological 3 level. I think that's the best option there. Coffee is moving sideways a little bit here, so a drop below the 277 territory is needed in order to go to the downside. For the upside, I would prefer to wait for a push above the 313 zone. If we can get the move there, then yes, more buyers could join in. Cocoa, just a quick update. After breaking the upper side of the falling channel, we travel a little bit higher, retrace back down, testing the upper side of the falling channel from above. So let's see if we can do this. If we can do this rebound. If we can do this rebound, amazing. More buyers here could join in. Wheat is dropping like crazy. So I think, well, not like crazy, of course, but for now, it's looking a little bit more bearish than bullish. Let's see if we can continue lower. Sugar is oscillating, or actually, I wouldn't say oscillating, but it's actually moving sideways a little bit here. It's stuck below the 16.79 and above the $16 mark. So we need a clearance through one of these levels in order to consider the next short-term directional move. Cotton is, yes, it's near my EMAs here, and I think I need to see a drop below this 67 mark here in order to go lower. So it's something like this needs to happen before considering lower levels for the upside. Look, I'll start looking at the upside if we start pushing above the 200-day EMA. If we can get that move, amazing. More buyers could join in. Let's jump into the crypto world for dessert. Look, I will also do an update later on tomorrow, maybe on Friday, of cryptos here. Look, for now, I would say this way that we're in the range. We're in the range between roughly 116,000 and 120,000. It's difficult to say that you're bullish or bearish. On one hand, I would say this way: if we are applying the logic that whenever we're ranging, we start ranging, we look at the prevailing trend. The prevailing trend is more to the upside, so a greater chance for this one to break out would be to the upside as well. And this way we would consider the next short-term directional move. We would go higher, of course, but I'm not excluding the downside scenario as well. I mean, several times we saw the opposite happening, and we need to take into consideration all options. Bitcoin Cash correcting lower after testing the upper side of the rising channel, and yeah, we're now near this 563 territory. We're stalling around it. If we do, this is what I was aiming for, and if we do drop below this again, below the 563 territory, I'm leaning towards the lower side of the rising channel. Ethereum is stuck. It's stuck above, but it's kind of positively stuck. It's stuck above the 3,743 territory right here. So I'm still targeting this area right there, ladies and gentlemen. This territory, the psychological 4,000, 4,100. I think that's a good area to watch. So hey, let's see if we can reach that. Ripple corrected a little bit lower. I'm not saying that I'm bearish. I need for me to become a little bit more bearish. A drop below the psychological 3 level is needed. Also, a drop below the 2.9660 could kind of help us out here, the bears. But for the bulls, there is still an option as long as we stay above that psychological 3 level, and then we could go higher. But if we fall below the 3 level, I'm leaning towards the downside. Litecoin flirting with that 106.60 zone. Look, it's a strong area of support, but somehow the fact that we keep on getting closer to it, that's really that's really something that I'm worried about right now. But again, we could see a drop lower, we could see a test of the EMAs, and then a rebound and a push back up. So keep that in mind. Dogecoin, very quickly, Dogecoin drifting lower towards my EMAs. This is what I'm going to continue targeting my EMAs here, and then I'll take it from there. Polkadot fell back below the psychological 4 level and testing now the upside line. Let's see if we can rebound. If we can rebound, wonderful. If we cannot, well, I'm keeping an eye on the breakout here, and then yes, we'll consider further declines. Tron, beautiful move. Look at this, one of my favorite lately. Honestly, I like Tron. It's very technical, and it's actually behaving like a normal currency. This is what I'm loving. And we tested that 0.3439 zone. Beautiful hit here. So hey, if you're looking for some higher levels, a pop above this barrier is needed, so that's great. If you're looking for some lower areas, then I would say that a break of this upside line, probably yes, that's what I would go for. A break of that upside line, and then that would signal a change of the short-term trend, possibly opening the door towards my EMAs again. So, ladies and gentlemen, that's a wrap. Thank you very much for watching and listening. I hope you found it useful. I tried to stay brief, keep it brief, but as always, I extend a little bit. Almost, it's an hour's job, because if you're trying to cover that many instruments and give some sort of perspective, then it takes some time. So, but thank you very much for watching and listening. I really appreciate your time, ladies and gentlemen. Look, stay tuned. I mean, I will be throwing out some separate little pieces of analysis in the top news section, so you can check out that one. Don't forget to subscribe to our YouTube channel, and also join me tomorrow in my Zoom webinar, and the link for this webinar you can find in the description below. So, ladies and gentlemen, thank you very much, and I'll see you later. Bye-bye.